And we're beginning this week with a look at markets. As we're recording this, it's ahead of Friday's USDA WASDE report. And according to surveys, the trade is expecting total domestic corn production of nearly 15 billion bushels. This would be a yield improvement of 1 bushel per acre since last month. For beans, the average production estimate stands at 4.36 billion, up slightly from last month. Darin Newsom joined me this week to break down what he's seeing in the markets and how the current crop is looking.
I've heard from producers across the Midwest, from far western Nebraska to Ohio and so on, and south into Kansas, and basically what I'm hearing, for the most part, the crop looks pretty good. We've seen the carry in both new crop corn and soybean spreads getting stronger. And this is telling me again that we've got some pressure coming from the commercial side. And the only reason why they would do that, since we know nothing about demand for 2021-22, we know absolutely nothing, would be that production is expected to be larger. Doesn't matter what quote unquote official numbers come out at, but the general opinion is, this crop's getting larger, it looks better. And once harvest really gets rolling, we'll see what the numbers might be.
And Darin, probably one of those things where we've hit the high, but is it time now to turn our attention to the harvest low?
That high occurred in May. We topped out both there's a cash index that I watch, a weighted national average cash price that I watch, that and a continuous long-term December corn chart, which is a monthly chart. So both of these are monthly charts, and both of these long-term charts posted tops in May, and they've been coming down ever since. Not only that, but if we look at the 2021-22 forward curve, it's also seeing its carry, and that's just a series of future spreads. We're seeing the carry strengthen as well. So we've got futures markets, cash markets that show a technical top. Fundamentally, the markets are getting a bit more bearish and a bit less bullish, let's put it that way. And so, yeah, it looks like the high is in for this year. Now we'll have to wait to see if the normal seasonal low that tends to occur around the last week of September holds, or because we started at such a high price that we see a little bit longer, selling last a little bit longer this year.
So what advice do you have for the farmer who's wanting to get that post-harvest marketing plan in order?
What we have to do now is watch those seasonal tendencies. So let's take a look at Dees corn. And there's so many aspects of this. I mean, we could do an hour on this alone, because what we have to take into account is we have to take into account carry and basis expectations and all of these things. But what I'm hearing from most producers is that if they're hedged in the December contract, they're looking at these strengthening carries, and if they're going to be tucking it away in on-farm storage, they're going to be rolling out to the March, May, possibly the July futures contracts, and they're just going to hold it, and they're going to wait for some seasonal basis appreciation. And so I think we're going to see some of that. Now, if we also see December corn post its seasonal low at the end of September, then you could see both basis and futures start to move higher again. Do I think we're going to see anything like we did last year? No. But we never know. We don't know. It could happen. I mean, if all things fall right and we actually don't have the production that we think we do, then yeah, I mean, we could see a very explosive market in 21-22. I just don't think it's there, and I don't think we can rely on it. As for soybeans, we may see a few more of those moved right at harvest. Could be tough because we are seeing the market trend down a little bit, but this could weaken basis. But we're still seeing some international interest, some global interest, with China continuing to make small purchases. So again, at some point, as soon as we start seeing harvest, we're going to start rolling the ships again. We're going to start shipping, and that should help keep at least some support underneath the soybean market.
How big of a story is the U.S. dollar right now in relation to these markets?
The U.S. dollar is usually a story, but I think it's an overblown story. I think what we have to do is we have to look at the overall inflation story here. And we've seen lumber skyrocket and come tumbling down. We've seen natural gas skyrocket, come tumbling down. Crude oil starting to slide back again. A lot of this is also seasonal, but the idea was, the dollar was going to stay weak forever. The Federal Reserve was never going to make a move on interest rates. And then when they started talking about tapering, Chairman Powell was very clear when he said, tapering does not equal higher interest rates. So maybe it's 2023, whatever the case might be. Now, I'm still a US dollar bull. From a technical point of view, I think the US dollar is going to go higher. And if so, I do think that's going to bring some selling into commodities in general. And we've already seen it. Again, crude oil is coming down. We've got the grain and oilseed markets looking like they've topped out. So, I mean, there are some pieces in place. It is an issue. I don't think it is the deciding factor because it still comes down to supply and demand. And if there's no other competition in the world, global buyers are going to come to the US. Again, we're back in the world market, which is a good feeling. We've seen what it can do when we actually get back in the market. But as far as being the deciding factor, if, Brazil has plenty of supply and the US has plenty of supply, it could come into play. Other than that, probably not as big an issue as it used to be.